Mentioned about the profit pools that exist for companies which are doing this mid-income housing as well. Brigade right up there. They've done a QIP recently, raised 1,500 crores via the QIP. Pavitra Shankar, MD of the company, joins in right now to talk about that. Pavitra, great having you. Thanks so much for taking the time out. Neeraj here, good morning. Congrats on the QIP. Why this need to raise money at this current juncture?
Hi Neeraj, good to be back and thank you for having me. Yes, we definitely wanted to capitalize on the trends that we're seeing in the sector for the foreseeable future and wanted to capitalize on that by raising money for growth capital basically. We'll be using this predominantly to acquire land for the residential sector. We feel that this is a great time to be across all verticals actually, but especially on residential because the ability to monetize and also to serve the very strong demand that we see on ground is looking really positive.
Okay. How positive? Tell us about the sentiment because everybody talks about how real estate is a long cycle. You've spoken about this as well, multiple factors out there. How are things on the ground?
So, we've seen already a couple of years of really strong price increase. Despite that, any new launches are pretty much met with a lot of enthusiasm, which you can physically see by end customers. I'll talk about Brigade in Bangalore, Chennai, and Hyderabad upcoming soon, our launch. But basically, we are seeing a lot of end users come to our sites, respond to our digital marketing campaigns, have very serious conversations about, investing in the residential sector. So I think because of that, we are and also seeing very quick conversions for the kind of units that they want to buy. Right. So I think from that perspective, we're seeing that it is still very solid demand, despite the price increases so far. Going forward, we are also not really expecting to push pricing so much. I think the pricing that we've seen over the last couple of years has been really healthy. The market is in a good place right now, and it should continue to grow in a stable manner without, expectations also being like, you will still continue to see double-digit and very high price increases. That's when people tend to get carried away. So if we can continue to grow in single-digit price over the next couple of years, I think that's really very good. I did hear the previous speaker as well. So I think from that perspective, inventory is at all-time lows across most of the top developers, especially in markets like Bangalore. We specifically have about 4 million square feet of residential inventory left to sell. And if you look at quarters to sell, Bangalore must be one of the lowest, which means of all the inventory that we have available in the city, it is under 4 quarters to sell. So that means it's very much a seller's market, and that's why we're feeling very positive about things.
So, Pavitra, just for historical context or understanding this properly, under 4 quarters is the lowest since a number of years?
Yeah, a number of years. I would say an equilibrium point is it should take about 2 to 3 years. Okay. So that's about 12 quarters to basically, sell what is coming out into the market. Because I think the model has been in the past that, if a developer can sell whatever is that project's inventory during the time of construction, then that is sort of the best case scenario. Over the last few years, we've seen that sort of really decrease because of the absorption that is possible. End customers are actually willing to buy earlier and earlier in the time of the launch and the inventory cycle itself. So the demand is so much that we are still able to achieve the pricing that we want for each project, even though we're moving the inventory much, much faster than before. And this is a story we're seeing across multiple markets, across multiple developers as well.
Okay. So, Pavitra, tell us what's happening to cash flows thereof. Because, after 2 really heady years, there was a bit of a pullback on the operating cash flow, let's say, for the year at large, and there may be multiple reasons there. But because sales are so strong, since you're saying inventory is also at 4 quarters lows, it's astounding to know that 4-quarter low is probably so low relative to what you ideally have or ideally can have. What's happening to cash flows, and would this fundraise that you've done be the last of the ones, or it's difficult to call that right now?
On the cash flow side, the sales and pre-sales are just are an indicator. They're sort of a leading indicator of what is to come. Now that we have sold, and in many projects, we tend to sell like 50-60% of the inventory within the first 2 quarters itself. So a lot of the sales start to get locked in at pricing that we are happy with. So it's not that we are just trying to monetize as quickly as possible. This is pricing that we are happy with. Basically, once the project starts to get constructed, that is how we are able to raise the payment demands from the customers due to RERA as well. So as the customers make their payments based on construction linked milestones. So the cash flows should be balanced. In fact, that is why, Brigade has in the past been able to pay off all of the residential debt on across our projects. So we're basically a zero debt on the residential segment. So we can fund the construction with the customer advances while they are also funding, in tandem with the work that is happening. So the cash flows should still be matching. We have done a fundraise because, sometimes when you have land acquisitions, the amounts that are needed upfront are substantial. So in order to sort of be ready for whatever other opportunities that are presenting themselves today, whether it is joint development or outright acquisition, the fundraise was done to have us be prepared for those kind of opportunities that are coming up across our target markets, Bangalore, Chennai, and Hyderabad.
Okay. And for the quarter gone by as well, I mean, while reported residential would have looked muted, annuity fared really well. So tell us about that side now. How strong is annuity looking, and how will you expand the annuity portfolio materially, Pavitra? Because different peers of yours are following different lines, and all could be great, right? There's no one holy grail. Just trying to understand, how are you thinking about it?
Yeah, so Brigade has always preferred, a diversified strategy across different domains in real estate. We have actually originally were a commercial real estate company for the first few projects before we started getting into residential. That's way back, 4 decades ago. But currently, our annuity portfolio, we have almost 9 million square feet operating across commercial and retail, and it's almost fully leased out. We have very minimal vacancy. One thing I would like to point out here is, despite having at least a 5 million square feet of SEZ space, we have been able to lease that out completely without having to denotify any of it. So I think that's testament to the strength of the kind of products that we're building, and also the preference of tenants to be in our projects. So that's the reason why the annuity portfolio is cash flowing well and should continue to do so, because now all of the leases are basically locked in, and we'll basically be seeing escalations per the lease agreement. So as of now, the portfolio that we have is fully leased. We are looking to build out another 6 million square feet over the coming few years. And we'll basically be doing that across 3 markets of Bangalore, Chennai, and Hyderabad. So there is a lot of positive outlook for the office and retail segment as well. Office, I think, the whole work from home, hybrid, etc., has sort of settled. Even globally, most companies are pretty much back to work at least 4 days a week. Employers want quality spaces where the employees feel happy to be coming into work, all of that. So I think, and absorption on the commercial space as well has been doing very well in the past year or so, and this year again promises to be a bumper year in terms of leasing. So all things considered, the outlook is very good for office. As far as we are concerned, we want to continue growing that portfolio along with the residential segment as well. Based on the kind of opportunities that we'll see, deal by deal, we'll sort of decide whether that's good for office or residential. But that's kind of how we have been growing in the past and how we'll continue to do so in the future as well.
We wish you all the best for that future, Pavitra. Shankar, thank you so much for taking the time out and being with us today.
Thank you, Neeraj. It was great. Thanks.
Right, that's Brigade Enterprises talking about their numbers, the rationale for the QIP, essentially growth.